Hi, Assalamualaikum. So let's take a look at what Shariah Audit is all about. So many entities define Shariah Audit, but at the end of it have the similarity in terms of achieving assurance to ensure and improve internal control system. So what is actually this Shariah Audit? So the term Shariah Audit refers to periodic evaluation carried out with the primary goal of ensuring a sound and efficient internal control system for Shariah compliance. These evaluations serve to provide an independent assessment and objective assurance designed to add value and improve the degree of compliance in relation to the IFS in business operation. So next one is the objective of Shariah Audit. So the objective is as comprehensive and efficient Shariah compliance internal control system. It also to ensure that a sufficient structure of checks and balance is in place and it is adopted to the aims and mission of the organization while following the Maqasid Shariah, which is an Islamic legal doctrine. And the third one is the Shariah Audit is to ensure the financial statement is prepared based on all aspects of life following the Shariah principle rules along with the accounting standards of AUD689. So after knowing the objective of Shariah Audit, now we take a look at the importance of this Shariah Audit. So first one, Shariah Audit is important to ensure the Shariah compliance in accordance with fast expansion of IFS. It is also a reflection of the auditor accountability, not only the issuer of the statement, but the most importantly to the creator, which is Allah Subhanahu Wa Taala. So Shariah Audit also act as assurance to tools in order to achieve the Maqasid Shariah, which is the objective of Islamic law. And not to forget also the pattern and responsibility of the auditor, not only toward those who have interest, but toward the creators, which is Allah Subhanahu Wa Taala. So all the previous important objective and the definition is what is actually the needs for Shariah Audit. So it is because first one is to report the findings of Shariah compliance and also non-compliance. It also to assess the degree of non-compliance and its effect, and lastly is to recommend corrective action, improvement and also rectification.
Next, let us look at the scope of Shariah Audit. All elements of the IFI business operations and activities should be covered by the Shariah Audit scope, together with audit of financial statements of the IFI. In the event that an external auditor is hired to conduct the audit, the IFI must be certain that the Shariah Audit is covered by the external auditor's full scope of work. Other scope of Shariah Audit are compliance audit on organizational structure, people, process and information technology, application systems and review of adequacy of the Shariah governance process. There is a difference between Shariah Audit and conventional audit. Let's look. The first element is accountability. In conventional audit, the accountability for the auditor is entity and user, while Shariah Audit is entity, border, range of users and guard. Next element is subject matter. In conventional audit, it is using a financial statement assertion, while Shariah Audit is process, contracts, human resource, system, performance and financial statements. The third element is established criteria. In conventional audit, it is using IFRS standards, while Shariah Audit is using Shariah principle and rules, AAOIFI and appropriate parts of IFRS. Next is sources of evidence. In conventional audit, it is sufficient and appropriate evidence, while Shariah Audit is SHC rulings, fatwas of international and national fiqh boards, plus all the other evidence. And lastly, reporting document. In conventional audit, it is using standard audit report prepared by auditor, while Shariah Audit, it is more detailed report prepared by a Shariah auditor.
Next, I will proceed to the case related to the Shariah, which is MKS Sheikh Islam Berhad vs Bank Islam Malaysia Berhad. Plaintiff was granted an Islamic financial facility premise on BBA Al-Bay Bihamin Ajil upon agreement from the dependent opinion of property purchase agreement, properties agreement and agency. The plaintiff had breached the agreement and the defendant sued against the plaintiff claim outstanding balance of the facility together with ta'wid or composition in the amount of 10,384,262 ringgit and 88 cents from the period of 30 months from January 2000 until June 2012. What is ta'wid? Ta'wid is late payment composition imposed by a bank on a defaulting customer who fails to meet his obligation to repay the principal. The issue in this case is first, whether the defendant was entitled to charge the plaintiff ta'wid pursuant to the agreement. Second, whether the defendant was entitled in law to charge the plaintiff ta'wid. Or third, whether the defendant was entitled to charge ta'wid. Okay, the court finding from this case is first, a declaration that the defendant is not entitled to charge ta'wid in law. Second, an order for the defendant to return and or pay the plaintiff the sum the defendant had taken as ta'wid from the plaintiff, which sum shall be assessed by the court. This was because the respective party could not confirm the actual amount of ta'wid which was deducted by the defendant or the actual amount of ta'wid imposed by the defendant, wanting in their prospective evidence. Next is the claim for interest is denied as this is provided in Shariah and Islamic financial framework. And lastly, the cost of 50,000 which the defendant need to pay to the plaintiff and the sum that plaintiff had to occur for the expenses to engage the service of an expert is allowed. The next case is GRI Resources Sdn Bhd versus Kuwait Financial House Malaysia Berhad. In 2008, Kuwait Financial House purchased vessel from third party as request of GRI and KFH become the owner of the vessel and leased the vessel to the GRI. On 2 September 2013, Kuwait Financial House had filed an action in the High Court against GRI Resources and is granted for default in payment of ijarah facilities and muharabah tawaduk contract financial facilities provided by the KFH to GRI. After the High Court granted summary judgment in favor of KFH, GRI appealed to the Court of Appeal, submitting in the earlier that the High Court had error in not seeking a ruling on whether a clause in the Ijarah Facility Agreement was Shariah compliance in accordance with the Section 56 of CDA. The Courts of Appeal and Direct Matter be referenced to the section which provided a ruling that the clause was Shariah compliant. GRI subsequently filed an application for a reference to the Federal Court for a determination as to whether Section 56 and 57 of the CBMA will be constitutional. The High Court dismissed GRI's application, but the court allowed GRI appeal and ordered the High Court to make the reference. The issue in this case is raised when GRIs challenged the rule of SAC in the Federal Report. Specific question raised for the determination by the Federal Court was where the Section 56 and 57 of the CBMA 2009 are unconstitutional for removing distributions of the court as to the need for expert evidence on the subject matters and making the expert opinion of the SAC binding and core. That's all from me, so I will pass the presentation to the next presenter.
Now, let's look at the challenges of Shariah audit. The first is sufficient standard for Shariah auditing practices. The IFI are required to adhere to Shariah rules which prohibit, among other things, the use of interest in business transactions. This shows the necessity for a comprehensive set of integrated Shariah auditing standards. The accounting practices and standards used by IFIs to prepare their financial reports are not currently regulated. Due to this situation, IFI have created their own set of rules and regulations for various commercial dealings based on consultations between the Management, Shariah Supervisor Board, SSB, and outside auditors. However, a lack of auditing standards that take into account Shariah principles may result in a misunderstanding of Shariah rulings and provide a solid foundation for any argument against the regulation of IFI. Next is independence of Shariah auditor. The perceived independence of Shariah auditors has led IFI stakeholders to view auditors as having integrity. To ensure that transactions strictly follow to Shariah principles, the Shariah Supervisor Board monitors governance in IFI, the SSB's independence is compromised by its involvement in overseeing the operations and output of IFIs while also carrying out Shariah's audits or reviews. There is no distinct line between the many tasks that is essential to take the exercise of good governance. IFIs will need to evaluate the necessity of a distinct division of tasks. Third is lack of competency of Shariah auditor. The critical requirements of the Shariah's auditor have been mute out until this point due to a lack of both accounting and Shariah's expertise. People who are familiar with accounting are often not familiar with Shariah's and vice versa. Since the 1970s, when contemporary Islamic banking first began to take shape, this topic has been up for discussion. It should be mentioned that in order to comprehend and audit IFIs, a Shariah auditor must possess true accounting and Shariah understanding. Investments in Shariah's accounting and auditing education are essential to advancing the knowledge and skills of those involved with Shariah audits in particular and IFI in general. Lastly, lack of accountability of Shariah auditors. Internal and external auditors are capable of performing a Shariah audit as long as they have the necessary training and knowledge of Shariah's guiding principle. The SSP committee is then sent the principal report to get their input of Shariah-related issues before it is presented to the board of directors. It is believed that Shariah auditors' influence on IFI's decision-making is restricted to helping them prepare financial reports. The Shariah auditors' limited ability to influence board decisions suggests a lack of accountability on their part. The Shariah auditors should have been held to a higher standard of responsibility given that they are responsible to stakeholders who include the shareholders, the community and the Ummah.
So I will proceed with the recommendation. The institution of Hizbah provide the role as the inspector of the market. They are auditing the businesses whether they comply with the Shariah or not and reported the findings to the institution where corrective action would have been taken to the offenders. Firstly, instead of leaving it to the industry, it is advised that the CBM, which is the Center for Board Matters, take on this duty by providing the benchmark and standard necessary for an effective and efficient internal Shariah audit framework. The prototype concept will be used by Islamic banks and takaful businesses after being modified to meet the specific operational and product needs of each sector. Next is to ensure that the auditors, reviewers and advisors are competent, professional and effective in their audit practice. A comprehensive talent development program for internal Shariah auditors, reviewers and advisors must be developed. This program should include skill training, cross-training and or cross-fertilization of ideas between audit and Shariah, as well as ongoing professional education on Shariah audit through professional and certification courses. This will increase the pool of knowledge and avoid internal auditors from being poached from within the industry. Next is for the purpose of regulating the auditing industry, which includes both internal and external auditors, and to ensure consistency in audit practice, a professional practice code for Shariah auditors must be created. Under the new system, internal Shariah auditors will have a wider range of responsibilities, including performing Shariah audit to ensure effective Shariah governance, in addition to serving as a crucial component of corporate governance. To avoid a slowdown in the advancement of this young field, there needs to be centralized regulation of the Shariah auditing practice and profession. And lastly, to encourage greater transparency in Shariah compliance, IFI in Malaysia may consider about reporting the Shariah audit findings as a separate statement in their annual report. This can take the form of a Shariah committee annual report, which is a compilation of all fatwas, rulings and product approval documentation along with a summary of the risk areas for Shariah non-compliance, a risk-based approach to auditing, and proactive corrective measures that have been put in place to ensure the effectiveness and efficiency of internal control system. The extent of the accomplishment of the IFI corporate social responsibility, including their efforts to eliminate poverty, establish social justice, and protect the environment, must be shown in the annual audit report of external auditors. These reports are required to include not only the financial statement, but also information about the overall operation of the IFI. And lastly, for conclusion, in a nutshell, the rapid and significant expansion of Islamic finance need the use of professional Shariah auditors by IFI. There are still concerns and obstacles in Shariah compliant auditing in terms of Shariah auditing standard, Shariah auditor skills and expertise, and also Shariah auditor independence. As a result, closing the gap requires action since it will have an effect on stakeholder trust in the Shariah compliance of the IFI product and services on its operation and activities. The Shariah auditors play an important part to maintain the transparency and to gain public confidence according to the integrity of Islamic financial institution, which is IFI. However, it is not an easy task to conduct a Shariah audit as the scope of Shariah law is very wide, especially in meeting the objective of profit maximization and the competitive conventional industry. The increasing growth of Islamic finance requires the IFI to require knowledgeable and good ability of Shariah auditors.